Well done on the surname for one. I'll be honest with you, it took me until I was 7 to actually get it right. Even then it's phoneticized. PolarX, are we actually on the screen? We're on that one, not mine. Okay, a brief introduction. I'm not going to labour slides here today. There's too many words on these and it's really not for this kind of presentation. But if you turn up to the booth, I'll give you a hard copy, or if you get online, it's polarx.com.au. Where are we? We're in copper and gold. We're in Alaska, in good old USA, and in Nevada in good old USA. We've just completed a scoping study in Alaska on a high-grade copper and gold project over 2 separate deposits there. And we've also, over the last 18 months, taken on a project in Nevada, the likes of which you'll rarely see. And I'll give you a good feel for that. Now, the rub here today is, we have a scoping study out with a high-margin project in Alaska that says it has an NPV of 300 million Aussie dollars over the next 10 years, discounted to today's dollars. Yet a market capitalisation at less than 5% of that. And that's a big discount, and it's a big discount for uncertainty, I guess. An uncertainty which I think is in the wrong place. And I'll, over the next 15 minutes, give you a feel for why I think that. Who are we? I'm a chartered accountant. I've been involved or run projects all of which developed in 5 mines so far around the world. I don't like kidding myself. I always take them to the scoping study early, because you need to establish early on the difference between fantasy and financial. It's as simple as that. You are otherwise wasting money and shareholders' money in your own time, drilling great holes that never amount to anything. I don't like doing that. 2 doctorate geologists, they're the real magic in this show. Both of them surprisingly hands-on. Jason's the MD. He should be doing this job today, but he's just undergone an ankle reconstruction. So getting from the bedroom to the bathroom this week's actually a big day out for him at the moment. He's certainly not on a road show. That leaves little old me. Now, what do we look like? Well, it's an interesting register. Northern Star, one of the largest. Rougher Gold Fund, the largest, which is a $2 billion plus fund in London. US Global, we have Lundin Mining, also from Canada. Now, they're big shows, all of them. They're big funds, they're big companies. And I put it to you, that's all the validation you need. If you don't believe a word I say, you should question exactly why they're on the register. And they're there because of the quality of the assets, and to an extent, the quality of follow-through for the people behind it. Alaska, most of you wouldn't have considered Alaska to date. It doesn't sound like it should be, but it's on the Pacific Ring of Fire, the very same geological structure that hosts the world's biggest and best copper-gold deposits. So all of those deposits you see down the South Americas are on it. All of the biggies you see in Asia are on it. Now, we're there because it hosts big deposits, and it's had new discoveries in a big way in the last 10 to 20 years. Things like Donlin Creek, it's 80 million ounces of gold at 2.2 grams. To give a sense of that, the super pit's 60, plus maybe another 10 underground at around the same grade. So these are big discoveries, and that's going to production at the moment. Pebble's even bigger, it's 100 million ouncer. Now it's got some environmental challenges because it's in an environmentally sensitive area. But again, new discovery. It's not the only one. Now, just north of where we are, we're on the Denali Highway. There's reasonable infrastructure around us. We're on a proper access road. Nobody living on our tenure, state-owned tenure, so we don't have to deal with the federal government, thank God. And no native title issues. And even if there were, to be honest with you, they're quite commercial. North of us is Pogo, with our good friends Northern Star, who have been very supportive. We both shared not being able to go to country during lockdown for 3 years. It makes it awfully difficult running one of these things overseas when you can't actually go there. There it is. It didn't look like that when we first took it on 7 years ago. 35 kilometres of continuous tenure. Where it's been soil sampled, there's copper and gold from surface on all of it. The largest anomalies out to the right-hand side there span 11 by 8 kilometres. and not one bit of that's been drilled yet. It's massive scale. It's on a big porphyry system, as you'd expect, because it's on the Pacific Ring of Fire. We have a discovery porphyry hole into it, so we've proved that in concept. But that's not really where the market's head is at the moment. The market's head is in high grade, make it work positions, and that's what we're focused on short term. As I said earlier, taking it from a good idea to something that'll actually work and make money. Scoping study. I'm not going to sit here and labour numbers because it's going to bore you, but you know, there's a good 38% internal rate of return there for a 10-year program. Capital payback at under 3 years, even in a cold environment like this. And an operating margin of around 40% or just over, which I'd like to see a bit higher. I can show you where we think that's going to come from, because given the grade, it frankly should yield even more than that. And a 300 million NPV at the moment versus our market capitalisation. Now, a couple of obvious observations here. This is not our calculations, they're all independent. The resource itself was independent. We don't get to choose what it is or what the lower cuts are rather. The economics and the costings and the scoping itself, all independent. The pit designs, etc., as to whether it was open pit or underground, all independent yet again. Now at the moment, a few things came out of that, and I like to focus on the immediate future and the long-term future. Again, what's it take to make a real one out of this? And do we have one already? Now, in our case, we're actually joining two separate projects together. So, different metallurgy and about 20 kilometres apart from each other. Could we do that with one plant? Well, yes, we can. We've just shown we could do that. Simple crush, grind, float and send to concentrate. Now, that's baseline. I'd like to think we can do better than that. Two things came out of that. It's the obvious. Okay, if we extend it, what's it look like? Well, these are discounted NPV numbers, but it's roughly another $50 million straight to bottom line to add another year's production to either one of those two projects, and we know where that's coming from because we've drilled holes underneath the existing resource and it's already there. But the biggest shift is in improving the metallurgy on this thing. At the moment, we get about 80% metal recovery in flotation. And to give you a feel for it, even bumping that up to 85% and shipping a 20% concentrate almost doubles the NPV. And the reason for that's this. Normally, you know, most of the industry runs on about 0.3 to 0.5% copper is basically their head grade. Now, we're almost 10 times that. You know, we're on 3 to 5% copper. We've got 5% copper at surface. So the 20% that gets left behind is 1% copper on the waste dump. And that's almost double everybody else's head grade. So there's a lot to be had there because you've already mined it and processed it and thrown it on a dump. Far better if you can recover it on the way through. So we're actually looking at some test work at the moment, which we're flat out on. It's relatively cheap, it's relatively quick, but it's the biggest value uplift in the shortest period of time without diluting my capital base. I can go and drill more holes. I mean, if you take a look at this thing, you know, the last hole we drilled into this was 7% copper over 19 metres. Now, that's only from surface down to 150 metres, and all of that resource and would-be reserve reports to that pit. Now, we could go and drill flashy holes like that all year, but the reality is I need to know what the lower cut is to make a real one at all. Now, you find this time and time again, the reserve never looks as good as the resource. And when you take it to a reserve or a pseudo-reserve, in this case on a scoping study, it's 3%, it's not 7%. And the reason for that is you've got dilution, you know, underground mine dilution, payable faces that need to be wider than the ore body themselves, etc. You see it time and time again. And at the moment, you know, our focus is, look, if you can bump up the met and extend it at depth, that's where you'll make the most money. Now, we already have a hole another 150 metres below this. We know we're into the same geology. It needs infill to extend it. So plenty of upside. Similarly, exactly. There's a little difference. It's surface oxides and transitions to sulphides. Because we're floating it, we're actually going to mine the underground stuff first. So the takeaway from that is there's actually more money extending that at depth in the sulphides than along surface at strike in oxides in the short term, because we're going to mine the oxides last. Again, we have a hole another 150 metres below that projected position at the moment, which is in the same geology, so we know it'll carry. It needs infill drilling to extend it. Lots of strike potential there too. Now, I'm not going to labour those at all, but there's 50 metre hits there at 3 grams per tonne gold at surface. You know, there's a lot to be followed up, and the red bit to the left of the screen is the only part that's in the resource/reserve at the moment. I said earlier, it's a big patch. That's an 11 by 8 kilometre soil anomaly, never been drilled. We have one discovery hole into a porphyry target that we drilled a couple of years ago. It's confirmed porphyry discovery there. It's big scale stuff. It requires a big partner. Now, we're not going to kid ourselves. We could go out there and finish those holes on our money, and we'd be an even sexier, undervalued junior company. And the reason for that is these are billion-dollar developments and multi-billion-dollar shows. You need a big partner to do it. And have a look at our register, no accident. In fact, Lundin came in with that view in mind. Now, they couldn't follow through with their commitments to us, so we dropped it and parked it and kept it. It's trading stock for the future. On to Nevada. Now, Nevada's got a longer exploration cycle than Alaska has. Alaska runs 365 days a year if you're mining like you are at Pogo, but it's really only the Aussie footy season equivalent if you're here and doing it yourselves. Now, where are we? We're hard up against a 5 million ounce gold deposit on a patch of tenure which hasn't had any exploration for 100 years. It really hasn't seen anything since 1920. We're the first on it. We soil sampled corner to corner. We got some huge anomalies on it. We IP'd the best of those because we found that the highest grade gold seems to be where the highest intensity of sulphides are, and they seem to report to an IP survey. So we have an IP anomaly on that thing, which sits within the large-scale soil anomaly, which is itself is nearly 4 kilometres long and nearly 2 kilometres wide. About a half of that is high-grade IP, yet to be drilled. We threw a drill program at it late last year and early this, and what we found was interesting, and it's interesting, and I'm going to take you back a couple of slides to pick up why. There's gold no matter where you go. We drilled these on 200 metre centres trying to prove concept that there's gold everywhere. And that's what Nevada trend is. And 75% of the gold produced in America every year comes from Nevada and deposits that look like this. Now, if I take you back a slide or two, where are we? Next to a 5 million ouncer, north of a 400 million ounce silver mine, and in between that and us is what we think currently is a 10 or 12 million ounce gold deposit being drilled up privately, so they're no longer published, but it was 4 million ounces of gold 8 years ago when Barrick last owned it. Can I go forward on this? Yes, I can. Right. It's riddled with high-grade quartz. Now, some of these rock chips across this thing have been up to 3,300 grams per tonne. And like I said earlier, I could sugar hit this all day and impress the market, but none of it would end up in a proven position because there's too many veins to actually wrap into a resource reserve. You'd have all kinds of mine dilution trying to pick the eyes out of it. And that's exactly the problem everybody in the West Australian goldfields faces every day with an underground mine position. The difference here is, instead of it being hard rock, dead material around those high-grade deposits, it carries its own grade. And that's exactly why our neighbours are heap leaching it. They take the lot. Now, we're on the hillside, so you'll be talking almost zero strip ratio. The high grade will come within it. You don't need to blow your brains out trying to pick the eyes out of it. Now, our first high-grade hit was 9 metres at 124 grams. It was actually in 2 separate intercepts within that 9 metres. Is it a bit nuggety? Sure, but there's lots of these. And in fact, if you have a look at that picture there, there's lots such veins. They all carry some grade. Now, we cut a trench across that thing with a dirty big rock saw, 100 metres long. And we saw nearly 70 metres at 1.1 grams per tonne gold in surface depleted material. Now, the neighbours next door are mining 0.4 and making money out of that in heap leach. So it augurs well for a drill program, and that's what we've got next planned. So there you have it. I'm 30 seconds over time. You have validation. You have 2 projects here, each one of which would be a viable outcome for any junior, and you've got a really good shot at turning a 15 million market cap into 10 times that with a bit of market following. Thank you.